Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on Newstalk 580 CFRA.
Welcome back to the show, everybody. To the phones we go. We've got Jack in Clarence Creek has a question about reverse mortgages. Oh. Jack, welcome to the show.
Hi there. How are you doing today?
Good, Jack. Great, Jack. It's funny you're saying that because I was going to make an announcement at the end of the show about reverse mortgage seminar, but go ahead.
They're getting more popular, right?
Very, very popular.
There you go. I own my own house.
Yep.
It's like a little 3-bedroom, 1,100 square foot bungalow that I converted into a 2-bedroom because I have no children.
Okay.
Hence the reason why my house is paid.
I was going to say that's why your house is paid. Exactly.
And so, like, my wife and I, I don't have any children to leave this to, and we have a beautiful property out here. It's like on an acre and a half, fully treed. My house is dated, but it's still in great shape,
Yep.
and I was just wondering what's your thought on that?
Well, you mean as far as borrowing, what do you want to do? You want to upgrade it to make it nicer, or just borrow some of the equity from the house for something else?
Well, I mean, the reverse equity.
The reverse mortgage. So how old are you?
Sorry, reverse mortgage.
Yeah.
That would be to like take the money and run and go and maybe
more or less.
buy.
More or less. I mean, you still own the home, obviously, and you still maintain your home. But how old are you?
I'm 63, and I'm trying to retire. I'm a construction worker. I've been doing that for 47 years.
Okay, wow.
And I'm trying to retire before I'm 63.
Yeah. So so reverse mortgages are becoming, like Paul said, very, very popular as our population continues to age, and we've got an aging population, and we've got a lot of Canadians who either have their houses fully paid or have very small mortgages on them, but they've hit their golden years where they're in their 60s and they're ready to retire, but they want to continue to stay in their home, and they want to make sure that their lifestyle is at or better than what they have right now and be able to have more flexibility, maybe traveling, or some people will do it and upgrade the home because, again, as you get older, maybe you need other aspects added to your home as you get older. But, so what's going to happen is on a reverse mortgage, it's actually, it's exactly what it says. It's the reverse of a standard mortgage. So when you make payments on a normal mortgage, a certain portion goes to principal and a certain portion goes to interest, depending on your interest and your amortization. A reverse mortgage, there's nothing that goes to principal. You don't make any payments. You could, on a reverse mortgage, you could make payments. So I've had scenarios where I've done a reverse mortgage for someone who says, Frank, here's my pension income. I'm comfortable putting $500 a month towards the mortgage, but the interest is $900. So, instead of the mortgage going up by $900, it only goes up by $400 every month. So what happens on a reverse mortgage is your mortgage balance appreciates every year, so it goes up. So, just to keep it simple, if you borrowed $100,000 at 5%, it's $5,000 of interest. So at the end of a year, you don't make any mortgage payments, but now your balance on your mortgage is $105,000, where the year before it was $100,000, and so on. It keeps going up.
Right.
Now, depending on your age, so it's very similar to life insurance. As you get older, life insurance obviously becomes more expensive because the risk level goes up as you get older to pass away.
Yeah.
The same thing happens on a reverse mortgage. The older you are, then the more equity you can pull out of the property because you're likely to pass away sooner. So if you're 63, which is still fairly young, because I'm 63, so we're young.
Yeah. I feel sorry. What's the gentleman's name?
Jack.
Jack, I feel sorry for you, what Frank just said.
You're not that far away there, dude. So easy. But anyway.
He's the youngest guy in the room right now, just so you know.
That's right.
So, But at 60, again, at 63, you could still get a percentage, but the percentage is much less. And the way the thinking goes, and for those that say, it's too expensive, I don't want my mortgage to go up. And I know that Paul talked about real estate stats where the real estate values have gone down a little bit, month over month. But realistically, if your real estate value were to go up 3% a year, so if you owned a $500,000 home, so 3% would make your home worth $515 after year one, and let's say $530, a little more than that, $530 after year two. But if you borrowed, $200,000 on that house, let's say, and it was at 6%, that's $12,000 a year. So in essence, even though you're not making a mortgage payment, your equity is remaining fairly stable because as your property value goes up, your mortgage balance goes up, but your equity remains stable. So that's the thinking behind it, where a lot of people get caught up, worried about their mortgage payment going up, but they forget that the value of their home is going up too.
Also going up. Yeah.
So again, the banks that do the reverse mortgages know this too, because that's why they do a certain percentage, because they know that the likelihood is that the value of the home is going to continue to go up too. So their equity position will remain fairly stable. So the risk level for them is fairly minimal.
The lender feels secure in the transaction.
But frankly, I thought there was always an age limit on that. I thought you had to be a certain age before you applied for.
Yeah, so 55 is actually the age where you can get it. So you're not that far off, Paul. So so you really
years
before
I'm there.
Just a couple of years. So, but it's certainly something that's good. Now, I will say that it's slightly more expensive interest-wise than a standard traditional mortgage, but on a traditional mortgage, you got to make payments. So, we're seeing more and more, and that's why, I'll talk about it in the next segment, but we're going to do a seminar on April 15th, and it's going to be specifically on reverse mortgages. I'm very happy to say that Alison Bygrave, who's our home equity bank representative here in Ottawa, is going to join me, and we're going to do a little seminar on the 15th of April to explain what a reverse mortgage is. So
okay. All right.
So look for that. I mean, you can go to Mortgage Brokers Ottawa. We'll have it on our website, and I'll talk about it for the next 3 or 4 shows as we get closer to it. So, but a good idea. And if you want a little more detailed information, certainly feel free to call me on during the week if you want more information on it, Jack. But great question.
Great. Thanks for the call, Jack.
Thank you.
Thanks, Jack. Well, is there any like potential downsides in the reverse mortgage? Like, what do you?
Downside, really? I mean, it's now property values go down 1 year 2%, so you're losing a little bit of your equity, but that's going to happen anyway. I mean, whether you have a regular mortgage, you're losing some of that equity anyway. It's just that this allows, I think, older people to be able to stay in their homes, not have the financial stress that comes with having to have a mortgage payment. And it's not about keeping it for the rest of their lives. In some cases, maybe, someone's 63, 64, 65, wants to stay in it until they're 70 or 75. They're not ready to move to a condo or a retirement home, or they're not ready for that yet. They want to stay in their home. So this is an opportunity for them to be able to take some of the equity out that they built and have it maybe to live on, maybe to travel, maybe to do some upgrades on the house. And again, you can get a reverse mortgage similar to a mortgage, to a home equity line of credit where, we've done some where the customer wants $100,000 now to be able to put in their bank account, and then they want also $1,000 a month extra. So again, there's plans in place where you can get some money up front, and then you get $1,000 a month as well moving forward, so that it supplements your income.
I think I really think it's a great product to keep people in their homes. And let's be honest, as you age, life's expensive and you start to dwindle your savings. And this is a great way for them to have a little extra money to either stay in their home, potentially do a little bit of traveling if they're still healthy. Lots of different options. And I think it's becoming more popular. I mean, 5, 6, 7, 8 years ago, you didn't hear many people talking about reverse mortgages. You hear a lot of talk about reverse mortgages right now. You see a lot of commercials.
I agree. It's come up a lot more in the last couple of years.
It has come up a lot more. And I think it's a great product that allows people as they age to stay in their property, because we're seeing that. I mean,
and it's not forever, though, right? And that's why I say it's not about staying in it forever. It's about maybe not quite ready to go to the next phase.
Yeah.
Maybe it's a 5-year plan, and that's all it is. So, but again, they are gaining popularity. I'll be surprised if over the next 2 to 3 years that the big banks don't get in this business, because right now there's 3 or 4 lenders out there that do it, and they're very good at it. But I'm sure the banks are looking at this saying, wait a second. I mean, the banks, are all about making money. So if there's an opportunity for the banks to get into a reverse mortgage kind of type of product, I wouldn't be surprised to see them getting into it.
Well, we're in an aging population, let's be honest. And retirement residences, I'm not poo-pooing on retirement residents because they have their place, but they're not cheap. They're not cheap. I mean,
quite expensive.
They're quite expensive, and there's
you do get a lot for your money.
You sure
for that,
do.
But,
you sure do. But I mean, you go into a retirement residence, and then if you need another service like taking your medication, that's an add-on. And if you need, a meal plan fed to you, that's another add-on. Before long, I mean, people are like, well, what is that, about $4,000 a month? No, it's like 8 to 10. Like it's super, super expensive. You're spending that kind of money. You can't do it for very long. There's more people now that are staying in their house, bringing in health care. I'm going through that right now with my parents. I mean, it's to the point now where they're not going to a retirement residence. They're going to stay in their home, and it's now bringing someone in for my dad to help with taking care of and sitting there and being with him. That's what I would rather do than to put him in a retirement residence. Does
it make sense? Does it make sense for somebody to take some money out of a product like a reverse mortgage and do some accessibility upgrades and renovations?
That. Yeah, we're seeing a lot of that right now. I mean, let's be honest. When you're talking about even wheelchairs, do you have to expand doors? Do you have to, is there an elevator? Not an elevator, but one of those stair lifts that you need to put in a house. I mean, most people, are sort of living on a main level when they do age at that point anyways. But if you have to, put in a stair lift. Are you putting in a stair lift? And so there's more people that are making their house, and we're selling more houses that are accessible to wheelchairs, accessible to lifts, and accessible to bigger doors and things like that.
I appreciate it going in. My camera bag is quite big, so I like those extra wide doors when I'm walking in.
But it's happening quite a bit. We're seeing people that would prefer to renovate their property and stay in their property, or keep mom and dad in their property and do those renovations, than go to a retirement residence. And I'm not to, like I said, not to bash them, because I'm not. It's not what I'm doing.
There's a place and a time for it.
There is a place and a time for it. But I mean, you try to keep your parents in their house as long as possible. That's their comfort. That's where they've lived. That's where they want to be. And it's so products like this really help that to happen.
So in terms of doing accessibility renovations and stuff like that, is there things that people should avoid doing of those types of renovations?
The answer is yes and no, because you do have to eventually sell that house. And not everybody, like my family, we wouldn't be buying a house with a stair lift. Whereas Frank probably would need one soon, but you know what I mean? But my family, we don't want that. So
as long as it's got 2 kitchens, I don't care about the
right, yeah. But there are certain things like making doors wider. Oh, sure, I'll take that. I don't care. I mean, you can be any age for that. But yes, there are some things that you're going to do that are a deterrent when you do go to sell that property. And then there's other things that you're going to do that aren't going to be a deterrent. I mean, we had a call probably about 2 months ago where a gentleman with a bathtub, he's like, I need to put in one of those, or a lady with a bathtub, I need to put in one of those accessible bathtubs that opens at the side and you can walk in, but it's still a tub.
Yeah.
And she's like, I want to do it, but in 2 to 3 years when I go to sell, and our advice to her was, you need that, you do it, right?
Yeah.
And if someone has to change it, they have to change it afterwards, or you change it before you sell. Not everyone wants that for sure, but that's an easy change. You're not doing anything major to your property that isn't, that you can't remedy. So you have to live the way you have to live, not worrying about resale value, but just know there's a lot of things that you are going to do to make that house accessible that you will either have to change, or you have to
pull it out before selling.
Pull it out before selling, or know that it's probably not going to be very popular when you do go to sell.
Right. People may avoid the property. But if you're at that point where you're doing a reverse mortgage type property, you have a lot of equity in the house, I assume.
Hopefully,
at
that's
that point,
the key, right? I mean,
is there a limit to that, Frank? Is there a limit to equity?
There is, yeah. Unfortunately, I've had clients or calls from clients where their mortgage is quite high, and therefore the reverse mortgage just doesn't work at that point. And that's the tough conversation piece, to say that you really can't afford to stay in that house. You're giving up your equity. The longer you stay in it, you're losing equity. We can still continue to finance it, but I think it might be a better idea to try and get out sooner rather than later, and now take that equity and go find somewhere to live. But for those that question whether our population's aging, just look at every neighborhood, how many retirement homes are being built in every neighborhood. In Stittsville, I've never seen so many retirement homes going up like we have over the last 8 years, 9 years. It's incredible.
A gentleman that I know is in that business, in that field, and I think
going crazy.
I think he's got about 10 of them now. So and they just keep popping up.
Yeah. Have a question? Head over to realestateandmortgageshow.com, submit it there, or give us a call, 521-TALK, 521-8255. We'll be right back. Welcome back to the show. We have 2 callers waiting in our final segment here. So let's go right to the phones. We've got Maggie in Perth has a question about hardwood flooring. Maggie, welcome to the show.
Thank you. Love your show.
Thank you, Maggie.
I was wondering, we had our floors done 16 years ago when we moved into this condo townhouse, and the guy didn't do a great job. But anyways, we have to get them done again. And people are saying, go laminate. Every room is beautiful. You get the flow. But I think it's a sin to cover hardwood floors. Does it? And does it not keep the value up a little bit in a house?
100%. Now, when you said hardwood floors, are you ripping them out and redoing them, or are you just sanding them down?
Oh no, just sanding them and getting.
Do not put laminate floors over your beautiful hardwood floors. Definitely don't do that.
Thank you.
Hardwood is definitely more valuable. Saying that, there are some beautiful laminates out there that are almost as expensive as hardwood. But no, do not cover up those hardwood floors and do not rip them out.
If it's sandable and thick, then 100%.
100%. Hardwood's always the most valuable product out there that you can, and it keeps its value more than any type of flooring out there.
That's what I thought. And just a quick, I don't even know why I'm going to ask this question. As a mother, my daughter bought a 4-bedroom condo in Blackburn Hamlet in December.
Okay.
She paid $450 for it.
Okay.
Did she pay too much? Like, have houses dropped that much, everything, or no?
No, she bought it in December?
Yeah.
Oh, we've seen our average sale price go down a tiny bit, but it's coming back up. I wouldn't worry too much. I mean, if you told me she was going to sell it tomorrow, I'd say, but if
die there.
Yeah, no, don't panic about that. She didn't pay too much, and
okay.
And you know what? Obviously, real estate's a long-term play, and if it's a 4-bedroom, she's probably staying in that home for quite a while. So
forever.
Yeah.
Thank you very much, guys.
Thanks for the call, Maggie. Appreciate it.
Maggie was great. Right to the point. Let's go.
All right, and back to the phones. We got Nancy in Ottawa has a question about mortgages. Nancy, welcome to the show.
Hi, how's everybody?
Well, thank you.
Thank you. Happy Saturday.
Yes.
So I am a homeowner in Stittsville, and we are up for renegotiating our mortgage and wanted to borrow on our equity to pay off some debt.
Yep.
And our mortgage right now is $223,000.
Okay.
And we have about $80,000 in debt.
Yep.
Our annual income, and my husband's self-employed, our annual income is roughly, with all of his deductions and everything, about $75,000. Now, we did this years ago.
Yep.
And our mortgage was $325,000. So we've managed to pay quite a bit down. Our property is significantly worth more than it was back then.
Yep.
And so there is a lot of equity, and the bank denied it. They had stated, no, let's not do that. Let's apply for a home line plan. And
well, that's what's in their best interest sometimes, right? So sometimes they give you advice that works better for them than for you. So that's what you got to be cautious of. And that's why you get a second opinion. That's why I always say get a second opinion, get a third opinion if you have to. Personally, I believe that based on that income, you should be able to qualify to put that together. You've got lots of equity in the home, it sounds like, so that's another plus that's there. As long as your credit score is half decent, then you'll be okay. But I would say give me a call off the air maybe on Monday. I'm more than happy to go into more detail with you that I'm sure you don't want to share with everyone here on the air and get a better understanding of what you're looking for. And then from there, I can give you some options as to what I would do if I was in your shoes.
Oh, you are the man that I've been wanting to talk to for 3 weeks.
Don't say that. Oh.
Yeah, I need to fill it. I need to boost the ego. So
Thank you.
I really questioned it the entire month that I was back and forth with them, and I've dealt with this bank since I was a kid, and so the fact that they're not working with me is making me question everything that they've suggested. So.
Yeah, it's disappointing, eh? You're not the first person that's told me this. I had a client that I talked to yesterday, 1 month. They waited 1 month to get back to her, and her mortgage renewal is up on the 18th of March. So all of a sudden, but they do that sometimes on purpose because now it limits her ability to be able to go somewhere else to get a mortgage because she waited this long. And, of course, they didn't come back to her with a competitive rate. So now she's got to go into an open because we are going to switch the mortgage out to somewhere else because we can get a better rate somewhere else. So she's got to go into an open and pay extra interest costs for the next 2 weeks because they didn't respond to her. And, again, same thing as you. She's been with them for 30 years, she said. 30 years, and this is how they treat me.
Yeah.
So we're hearing more and more of that.
Yeah, and this is the way I felt. And so I'm just glad that I have until July
Yes.
But they're the ones that hauled me into the office because I was just questioning it.
Yeah,
so,
what rate's your current mortgage at?
Oh, it's great and low.
Yeah, so
2.1, I think.
Yeah, that's why we're going to wait. As much as you've got that other debt, we'd love to get rid of it sooner rather than later. You know, we'd have to do the math to figure out whether the extra 4 months of interest you're paying on the other debt would be more than what it's costing you to have that low interest rate mortgage and maybe pay the 3 months to pay that out. But that's something I'm willing to help you with next week when we chat.
Wonderful. Thank you so much. And will it be yourself?
Yeah. You give me a call at the office. You go mortgagebrokersottawa.com. You'll be able to find my information.
Yay.
Thank you.
Thanks so much for the call today, Nancy.
It's funny. I just got a text. You know this guy, the Italian stallion, Mr. Rob Sicoli, one of the big wheels over at Barwood Flooring. He sent me a message saying, "Good answer. Hardwood floors is the way to go."
Course.
Yeah,
of course.
There you go, Maggie. There's your answer from the hardwood flooring guy.
From Rob Sicoli at Barwood Flooring.
Way to go, Rob.
Way to go, Rob. He's our go-to source for hardwood flooring. Rob Sicoli, Barwood
awesome.
Flooring.
All right, Frank, birthdays?
That's awesome. Yeah, so I want to talk about the seminar, reverse seminar.
Yes.
We'll put it on our website this week. April 15th, Villa Marconi on Baseline right beside Myers. We're going to start at we're going to open it up at 10 a.m. We'll have some coffee and tea. We'll do the seminar, and then we're going to nice Italian lunch as well. So we can't have this without a nice Italian lunch. So.
Oh, you had Greg and I at Italian lunch.
There you go.
We'll be there.
There you go. So free food, but and we'll get registration. I think we're going to limit it to 75 or 100 people. So first come, first serve there. As soon as you register, then you'll be in. And we're going to have a couple of guests, including Paul. I think we'll get Paul to talk about real estate and certain things to do maybe as you're getting older and certain things not to do that will impact the value of your home. And then whether a reverse mortgage or a standard mortgage is your best option as you get into the retirement. So
amazing.
And then for birthdays, Mario, my brother-in-law Mario, celebrated his birthday yesterday. So happy birthday to Mario.
Good German name. I just have one. I mentioned it last week, but my son Hunter has his birthday on Friday, and obviously and so do you. Hunter now is in real estate and working with me, and one of the biggest joys of my life.
I think you can meet him at an open house tomorrow, I believe.
Yes, Hunter is doing an open house out one of the Clement townhomes out in Rockland.
That's awesome. Good for him.
325 Dion.
Yeah.
Great show, guys. Have a great week.
Great show. Please continue to support local businesses and charities, everyone. And Greg, I think the bylaw officer is giving you a ticket.
Gotta run. Have a great week, everyone.